Good afternoon, traders. This is Chris Buss with Traders Profit Compass with a market recap for Wednesday, August 5th. So what I want to do is, of course, go through the index charts. Then I want to move on to recap our FAANG names. And then I have a bunch of other charts of interest that I want to go through rather quickly. So let's get into it. Here we have the SPY 30-minute chart. Here's where we ended up yesterday at the close. We popped that 329.50 level, and then we gapped up this morning and spent the whole day in a fairly tight range. What I thought was interesting was, we came up and made a high. We had several topping tails. You can see them there that all stopped at 332.40. And then the last bar of the day, we touched both the bottom and the top of the range just for a triple check on the range. So tomorrow, it's pretty clear. Anything above 332.40, you can be a buyer there. With your stop just below. And then, of course, you could always, try to short the high. I mean, it hasn't been working lately, but that doesn't mean it won't work tomorrow. Really, the key right here for me on any kind of short side trade is a break into this gap and then look for a gap fill. And then if it breaks below the gap, we've got that, I didn't extend it here, but that 329.50, it just has to hold for the bulls to, keep the momentum going up. So just a consolidation day today after the breakout, and we'll see what happens tomorrow. Moving on to QQQ 30-minute chart. Pretty much the same thing. I mean, we don't have the gap below. Here's where we closed yesterday, and then we just made a little bit of progress today. Again, that final bar came to back touch that 270 level, which is critical to hold, and then right back up to the top of the range. I don't have that number handy. Let me look at it. 271.50 is your level right here at the top of the range. So those are the key levels for tomorrow. 271.50 and of course 270. That has to hold or we come back down. Maybe test this gap, maybe fill it. So if tech gets weak, this would be a short entry right here on a break of 270. And I think you'd come down pretty fast to the top of this gap at 267.90, and then maybe get a bounce. Probably be some dip buyers there, but if this gap fails, then you got another $2. So that would be a nice trade to catch. So make sure you got 270 alarmed in your system. The real hero today, at least as far as the index goes, was IWM. Here's the 2-hour chart. We finished the day yesterday right here. And it was real interesting. This gap went all the way back to March. And then we completely just jumped right over it and basically the same levels here. Just had a little back touch, and then it was off to the races all day. Really didn't have any reason to sell that or scare you out. We had a measured move, or we do have a measured move target of 155, and we're almost there already after only a day. So we'll see what happens tomorrow, but IWM is definitely catching some tailwinds. Here's the 30-minute chart. You can see that we had the gap here. Really gave you 3 chances to buy. The opening candle came down, didn't quite touch. Then we had 2 candles back to back that touched the same level. That would have been a nice place to try a long against the gap. And then, of course, the rest of the day was higher. So IWM is definitely catching a bid. I look for it to go higher. Nothing says that it can't come and back test this, and that would be a great place for a second chance entry to get long on IWM. As we said yesterday or this morning, 150 is your line in the sand. Anything above 150 is bullish. If we were to drop below, that would be bearish. Okay, on to the FAANG names, 60-minute charts. I'm telling you what, guys, somebody is going to make a boatload of money if they get this right. And I'm still not sure which way it's going to go. Yesterday, I had a couple short tries and got stopped. Of course, this gap held and bounced up, and today we're right back at it. I'm not saying it's going to break. I'm just saying if it does, it's going to go. I mean, the target would be 233. That's $15. That's going to be a really nice trade. But hey, if you're a bull, going from 249 to 256 ain't all bad either. And once you're at the top of the range, anything can happen. You can break out and go to, blue sky. If everything, gets bullish here and Facebook picks up the ball, no reason we can't go higher. So you gotta have a bias here. Do you want to be long against the gap? I mean, that makes sense. Or do you want to just wait and see if it breaks? I got a little frustrated yesterday. It dropped down twice below, and I thought it was gone, and it bounced back above. So at least we know that's a real location here. 249, 248.50, somewhere in there. Yeah. I mean, and Price knows it. I mean, look at it. Coming back, stopping at the same place. Everybody and their brother knows that's an important line, and we'll just see if it holds or if it doesn't. But it's going to be a big trade, one way or another. Amazon had a nice day today. Again, here was a deal where, I mean, I thought it was gone when it moved into this gap. It found support here at this level, 3,100, bounced up for a back test, came back again, and had a real nice day today and got up to this midpoint that we had marked before, 3,200. If you're a bull and you see a move above 3,200, you can get long against that level. It's a good level. And I think the door's open to 3,250. And then that's the real resistance right there. And if it can pop that, it can go up to, 33.35. And then on a measured move basis, we had a target way up at 3,600. So kind of a lot riding on, these FAANG. I guess there always is because they're such a high weighting. But, with Facebook on the edge, this Amazon is doing better. I mean, it saved the gap fill and then moved higher to this midpoint. So bulls are fighting back. I mean, there's some dip buyers there. So anyways, those are the key levels, and you can take it from there. Here's another one, Apple. You got the initial gap, and then you got a power move, and then you got another gap, and it spent the last 2 days, in this box, this well-defined range. And, if it pops 443, 444. I mean, it could go another leg higher, go up to 455, something like that. But there's a lot of air underneath this thing. I mean, a lot of air. You can see there's no volume over price support. There just hasn't been many transactions all in here. And, you know, once you get that ball rolling, if it does in fact roll, you know, a break of this 431, you know, brings you into 425, and then, you know, you take it from there. But I mean, it's holding tough. It looks like a bull flag right now. You got the massive flagpole, and if it pops, I mean, who knows where it might go. But just set your alarms. That's all you can do, and be ready. Microsoft got soggy after, you know, it was revealed that this is the gap up on, we're going to buy TikTok, and then this action in here is Apple might get involved and want to buy it too, so it got a little soggy. But we had the levels correct. These levels went back from before. I mean, I haven't moved them. We got this gap here at 211 down to 205. And we've got the top of this range here at 215, that if it can pop that, it's off to blue sky, all-time highs. So, and what I mean by this crisscross here, you know, if you were going to short or try a short, you can get short against the high at 215 and look for a move back to the bottom of the box. And if it moves into the gap, then you're good to go. You can add here at 211 and look for 205. If you're bullishly inclined, you can buy 211 and look for a move back up to 215. Hope for a breakout and add right there for a move higher. So, I mean, those are your key levels, 215 and 211. You should have those marked on your charts and, you know, decide how you want to play it. But the levels are pretty clear. Moving on to Google. Again, we had the levels nailed. It's been choppy action. This was a momentum overshoot on the way down after earnings. Punched through this 1465 area. Came down another $10 before it reversed. But now it's just chopping between 1490 and 1465 with a big gap above yet to fill. I would be getting short on a break of 1465, and I would be getting long for a gap fill above 1505. If you've got some conviction or you're just interested in trading the ranges, I mean, you buy right here at 1465 with a stop just below, and then you try to ride it back up to the top of the range. Or if we are at the top of the range, you short it and look for a move back to the bottom of the range with a stop just above. So there's Google. Netflix was pretty interesting today. We've got this $25 overhead gap that has yet to be filled. Took a look inside and then fell back. That could be a head fake move, and now we go lower. If it can recapture 505, you can get long and look for, you know, a move up to 530. But right here on the edge, anybody's ball game. If you wanted to try a short, it could be against 505 and look for a move down to this 475 level. We're in Intel. We got a bounce here. We got short on the bracket breakdown. Looks easy here. You know, you should have taken profits, but there's really nothing there. I looked back on the charts. 47, I don't think there's a lot there. I'm viewing this right now as a back check of the breakdown. It spiked up this morning and they faded it all day. So, if they close it above 49.5, I'm taking it off and just say I lost. But as long as it stays below 49.5, I'm gonna stick with it. I'm out in September, so I have time to wait on it. If the market gets soft, or if they just decide to sell Intel off, be in good shape. If they decide to buy it, I'll just close it out. XRT has been a phenomenal trade for us. We got in against 45.50. It's been up ever since. It hasn't given us any reason to be shaken out of the trade. This morning, we took profits on our initial position and rolled up to September 50s, which looks good already. I would just keep kind of, not necessarily on a short leash, but I don't want to give a ton back. So I got to stop here at 48 for now. I might just go candle by candle from here on out, just moving that up. We're going to have a ton of retailers reporting in the next 3 weeks, 3 or 4 weeks. And depending on the market and depending on how those earnings reactions go, this may keep going, or it may stall and consolidate for a while, or even pull back. But we got a great trade on the line, and I want to stick with it as long as we can. OLLI is a retailer, a discount retailer that we have trapped in a bracket trade right here. It's testing the bottom right now. I'd have to think long and hard about shorting this one. It's normally strong. I wouldn't say I wouldn't short it because I like the name too much, but if the market is strong, I think this one will hold its own. Now, if the market gets weak and retail starts falling apart, I think this could come back to this 87.50 level to kind of back test this level where it has found support before. So I want to keep my eye on it. Momentum has weakened a lot. I mean, we see that. And RSI up here is kind of testing 50. Keep it on the radar. We'll see if it can hold its bracket. And if not, we'll have a decision to make. So that's on the radar. Cost made a good move yesterday. We had gotten long against this 322 on the breakout. Spent quite a bit of time consolidating, broke out, was down this morning, and it actually had a good close, cutting those losses way down. So that trade still looks good. NEWR. This is why you don't hold into earnings. It's down 25% on earnings. Anybody that, I don't want to say trying to be a hero, but anybody taking that risk of being long and thinking it was going to fill the gap got a bad surprise, basically got wiped out of whatever they had. So the thing I wanted to point out here is this big range of value, and this is one of the reasons that I use these volume over price histograms. It tells you exactly where value is, and it's between 55 and 72, 73, and we're sitting right on it. It's not a coincidence that that's where it stopped. Now, going forward, we can play it 2 ways, at least 2 ways. Our first way is our traditional bracket setup. We're going to bracket the high and bracket the low and wait for a move out of the range. The other way to play it is it's sitting on a ledge. That ledge is support until it's broken. So if you're a dip buying kind of trader, you can get long right here against 55 with a little, tight stop below and say, hey, we are at support and it's big support. So I'm going to take my chances on being long and working for that gap fill. It may take weeks and weeks and weeks, but if you get a good trade entry point, I mean, that's the whole idea. Then you're in at the lows and you got, time is on your side. Then any break below 55 and you're out. The other way to play is, on a huge gap down, there's good odds that it's going to keep going for whatever reason. So you sit there and you wait for this breakdown, and then you get short against 55 and see if you can get a move, down into this area here. And there's not a lot of support. Once you lose 55, there's nothing there. So, that would be an awesome trade also. But we're definitely at a crossroads level. And if you think about it, that's your lowest risk level to be. Whether you're inclined to be bullish or inclined to be bearish, you want to be at the key pivot point and, pick a side and then set your stop on the other side and, see if you're right. So that's all I have. I really appreciate you spending some time with me this afternoon. I hope you had a good day of trading. If you look over in the show notes, if you're not a part of our team, there's a place where you can register at tradersprofitcompass.com. You'll get all my content at least 6 times a week each morning. And also most of the time I'll have an intraday note on trades or trade management. Definitely subscribe to the YouTube channel. Thumbs up would be appreciated if you like the content. So until next time, this has been Chris Buss with Traders Profit Compass. Talk to you soon.